dream of every startup. Take an old idea, bring it into the new online world, and see it take off globally.
Particularly in North America, is very strong. We've named some very large retailers that are coming online very shortly, which will continue our expansion.
Nick Molnar and Anthony Eisen have made modern-day lay-by service Afterpay so popular with millennials that it's now the subject of a $39 billion takeover by US payment giant Square.
We're really proud now to pass over 100,000 merchants globally accepting Afterpay.
Afterpay is now looking to mine data on its 16 million customers to get them to shop more and provide personalised information to retailers.
The millennial and Gen Z consumer will represent 50% of all retail spend globally by 2030. It is the core consumer base that retailers are focused on in acquiring.
The pandemic's pushed more shoppers online. Afterpay's revenue grew by 78% to almost $925 million following strong growth in America. But the company still hasn't made a profit. Loss after tax rose almost 700% to more than $156 million following rising marketing costs and staff share schemes.
As we continue to focus on both top line and margin, as we scale, that will translate to the bottom line.
Fund managers who have big stakes in Afterpay intend to hold on to the stock for the long term.
We haven't seen a deal that makes more strategic sense than Square and Afterpay. You know, they both understand the next generation.
But the buy now, pay later market is becoming more crowded, with global giants PayPal and Klarna competing for consumers. Local player Zip is also catching up. Customer numbers jumped 248% in the year to 7.3 million. The company made a $653 million loss, partially thanks to the cost of acquiring US business QuadPay. But Zip posted a 150% jump in revenue to hit a record of more than $403 million, led by strong growth in America.
The size of the market in the US is so significant, it's underappreciated potentially by Australian investors.
Buy now, pay later sales only make up about 2% of online payments globally. Companies like Afterpay and Zip want to gain a bigger share of that lucrative market by adding smaller merchants to their list of big-name retailers. Sasha Wicker offers Afterpay in her Melbourne fashion store. She's being charged 6% in fees for the privilege.
For a small business like myself, it eats into my margin, whereas I think with the bigger big box retailers that have a bigger margin, wouldn't affect their margins as much as mine.
Being able to maintain merchant fees has been core to Afterpay's success. It makes a small amount of money from consumers being charged late fees if they don't pay on time. But for now, the industry has escaped new regulation.
The customer outcomes here are better off because of innovations like Afterpay and new methods that don't rely on the traditional economic model where somebody has to lose for another party to win.
But if customers do start losing out because of buy now, pay later debt, regulation could still be on the cards.